All right, so a quick update on Crocs. I mentioned I have a mid-sized position in this, plus I've sold puts on it and bought calls on it. So it's doing really well lately after the most recent earnings call. And it's been on people's radar now because of this. So this is Lee Lu. He is a well-known value investor and famously for his association with Warren Buffett and Charlie Munger. So, Charlie Munger is Warren Buffett's business partner and legendary investor in his own right. And Lilu is the only person that he'd ever given outside money to manage for himself. He normally invests on his own, but he was so impressed with Lilu that he gave him some of the Munger family money for him to invest. And last quarter, when the filings came out about which hedge funds own what, and it turns out that he had a new position in Crocs. Now, this is only his US stocks. He has a lot of other stocks in China that are not shown here because the SEC filings for hedge funds only require you to show your US holdings. But this is kind of interesting. So it's currently a 1.5% position. You might be buying more, but it seems like he timed it really well because it got down in the 70s and 80s, and I was backing up the truck and telling people that I thought this was a great idea. And then he bought it, and now it's up to 100. So, going from the end of quarter to here, that return on a quarterly basis is, nice work if you can get it. So as a percentage of his portfolio, it's not huge, but he's got a huge portfolio, so that's $50 million that he invested in it, and thinks it's a good buy. And previously, it had come on people's radar because of this person, Norbert Liu, no relation, who is famously known for his association with Joel Greenblatt. And Joel Greenblatt gave him some money to run, and he runs a very concentrated portfolio. And sometimes he'll go, years before he buys anything. And then recently he bought Crocs and PayPal, and PayPal's not doing really well, but Crocs is, and it's sort of one of those things that's hidden in plain sight. So during the pandemic, people thought this was a fad, that it was a lot of people buying Crocs because they're stuck at home, and that could not continue, but it did keep going up after the pandemic ended. And so it's a 20% compounded annual growth rate if you start from 2018. And although it's flattened out in the US, and if you consider sales of Crocs along with the declining sales of Hey Dude, it is kind of flat in the US, but the sales of Crocs are rapidly growing overseas. China and India are currently very small markets, but it's growing like 30% in India and China year over year. So that could be a huge growth market for it. Earnings per share also up an incredible amount of 40% compounded annual growth rate. And they are massively buying back shares. So they bought about 10% of their shares last year. So you have a company that's growing, price like it's shrinking, but it's growing, and they're buying back shares. Doesn't have to take a lot for it to go right. And people don't like fashion brands, and I think this is wrongfully characterized as a fashion brand. So these are comfortable shoes. They're not nice looking shoes. They're comfortable, and comfort never goes out of style. And if you look at the operating margin, it's very high compared to other fashion brands. And I would say that if you compared it to a shoemaker like Nike, it would be even more impressive because shoes are pieces of leather and you have to sew them together. And Crocs is just liquid rubber injected into a mold. I have a pair here, and this is one mold and the strap is another. And there's two pieces of injection molded rubber, and you slap them together, and that's fine. It doesn't take any skilled labor to cut the leather, to sew it together. It's a mold which comes out the same every time. So it's very predictable. They're buying back stock at a huge rate. And as I said, if you think of this versus other shoe brands, it's very attractive. High margin, twice the margin of other shoe brands like Nike. And it's growing, it's buying back shares. And if you're worried about knockoffs, if you go on Amazon.com and search for Crocs and then sort by price low to high and sort by price high to low, you'll see that they go anywhere from $25 to $200. So they've got the whole gamut covered. And those gibbets that people like to put on their Crocs to customize them, especially kids, those they could make for pennies, literally pennies, and sell them for dollars. So it's a high margin and it's a great business for them. And they also have branding deals with people like Nintendo and Pokemon and stuff like that. So lots of ways you could win with this. But anyway, that's just my thoughts on that one. Let me know what you guys think in the comments. And this isn't investment advice. This is just me walking through my process. And I mentioned that this used to be a trading sardine for me. I would buy it when it got below 100, and I would sell it like 105, 108, and then reload when it got lower. And then when it dropped to the 80s and then the 70s, I was just backing up the truck, and I'm very happy with it now. But I plan to hold this for a while and see how it goes because I think it has more room to run. But that's just my opinion. This isn't me telling you how to invest. This is just me talking about how I invest in my process. And it helps me because it keeps me from changing my mind and falling victim to thesis drift. Anyway, if you got something out of this, subscribe so you'll see future videos and leave a question or comment in the comment section if you agree or disagree. Have a great day, everyone.